Here to talk about the Fed, the banking crisis, so much more. He's got a new TV show as well. We'll talk about it in a moment. David Rubenstein, co-founder and co-chairman of the Carlyle Group. And among those projects is a docuseries that's out a couple weeks still on PBS. But can we start with the Fed? I'm so curious. You saw the jobs number on Friday. It was Easter weekend, so I don't know how many people actually did see the jobs number. We hope a lot. Did you say to yourself, okay, things are actually better or worse than we thought, and therefore when you sort of intuit what Jay Powell has to do about it, where are you now?
Well, it's clear that we have an inability to get the unemployment rate as high as the Fed would like. The unemployment rate is 3.5%. I think the Fed would like it to be higher. They won't publicly say they want it to be 5 or 6%. But there's a tight labor market, and because the market is so tight, they can't get the unemployment rate as high as they would like, and that's a big problem for them. I would say a problem for everybody.
So you think that Jay Powell says, I got to keep putting my foot on the neck of the economy, if you will?
I think that when the May meeting comes up, I think it's likely to have a 25 basis point increase again. More likely than not, yes. And
that's not a surprise for you? Because, by the way, it seems like a surprise for the markets.
Well, markets are sometimes wrong. I would think that the 25 basis point increase is more likely than not because inflation hasn't really gone down as much as they would like. It's about 5.5% now, and they want to go to 2%.
Right. We keep talking about the banks. Where are you on this crisis? Is this a crisis? What does this look like to you?
I think people didn't anticipate something like Silicon Valley Bank, and we were surprised by it. Now I think the federal government has gotten its act together and pretty much solved the problem for the short period of time. You can always have a banking crisis. But is this a short-term solve? Meaning,
you remember back in 2007, there was BNP Paribas in the summer. Then we had Bear.
Right.
And there were these moments where it seemed like, okay, maybe things are okay. But it really wasn't solved. And I could argue to you that the implicit guarantee around deposits is sort of a temporary solve. But if you told me that 4, 5, 6 regional banks were going to go out of business over one weekend, by the way, that implicit guarantee may not be explicit anymore. Do you know what I mean?
I understand. Clearly, the federal government is willing to more or less guarantee deposits, but not creditors and shareholders. They're not going to help them out. And that's one of the problems they've had in solving some of the problems with the, let's say, First Republic Bank. There's a gigantic hole in its balance sheet, and anybody who wants to go and buy it needs protection from the federal government, and the government is reluctant to provide that protection.
Have you been looking at any of these banks?
I have not personally been looking at any of them.
But Carlyle in the business
I don't want to talk about what Carlyle. I don't want to talk about what Carlyle is doing. I would just say that many people have looked at these banks, but I think the federal government would prefer to have a strategic buy these banks rather than a financial buyer.
You think it's less morally hazardous if we imply that we're going to save depositors because it's an FDIC bank fund, or does it just give certain bank CEOs license to do things? I'm going to pay a higher interest rate and get these depositors. I don't have to worry because it's insured. It just seems like not quite as bad as what we've done in the past, but it doesn't seem like a good policy.
If you were a regulator, what would you do? If you had said you aren't going to protect depositors, you would have had it run on the bank that we wouldn't have liked.
Do you think that ultimately we need a more explicit policy around deposit protection?
I think probably it'll have to be raised from 250 at some point, but even that isn't going to solve the problem because you really have people who have enormous amounts of money in banks.
And you have big businesses, small businesses that have enormous amounts of cash. So what do you do about that?
Well, if I had the answer to that, I would be in Iowa, New Hampshire, and other places. Strategic ambiguity. It's the same as our Taiwan policy. It will guarantee if it happens again, your depositors are safe, but we're not doing it for everybody. It's like sometimes it's incongruous. It's not.
Government policy isn't as precise as you would like. It's just hard to make it as precise as you like. If you were making policy, what would you do?
I'm torn. I mean, remember we let Lehman go. It's like, let it work, and you see what happens. So things can happen if you don't.
The politics in Washington right now is to protect depositors and not protect creditors and shareholders.
You would agree that capitalism without downside is not capitalism?
Well, yes, but I mean, capitalism is something you support, right?
And I support it, but I don't support it that gains are, the CEOs get to. All their options kick in because they got the stock up. But when you lose, it's socialized. I don't agree with that.
The Silicon Valley Bank CEO is out of a job. So it's not as if somebody who's a CEO of one of these banks think they're going to be rewarded when the bank goes under because they've been doing risky things. He's out of a job now.
When you think about the repercussions of this whole banking crisis, I mean, one obvious one is just a tightening of credit overall. But how do you think through the most acute impacts in the economy? A lot of people are pointing to commercial real estate. Morgan Stanley had this piece out about how there's a wall of maturities that are going to come due in the next couple of years.
I think it's, Jamie Dimon in his annual letter said that we're not out of the crisis, and I think he's right. There could be another shoe to drop or so, but generally, I think the banking crisis is not as severe as what we had in 07, 08, and I think the federal government is very much on top of it. But to clear, there's some banks that can come along and cause problems. The smaller regional banks are probably the bigger problem than the big global banks. In 07, 08, we had problems with the largest banks. The largest banks now are not in trouble.